Have you ever wondered if there's a new edge in the world of finance? Something that goes beyond the old school advice of just buying and holding? What if I told you that the biggest players on Wall Street are using a secret weapon, one that's now becoming accessible to everyday people like you and me? We're talking about artificial intelligence, and it's completely changing the game. Stick around, because by the end of this video, you'll understand exactly how AI is reshaping the financial world and how you can start thinking about its potential for your own strategy. So what exactly is algorithmic trading? Let's break it down. At its simplest, it's using a computer program to buy and sell assets based on a set of predefined rules. Think of it like giving a super smart assistant a very specific instruction manual. For example, you could tell it, if this stock's price drops by 5% and this technical indicator crosses a certain line by 100 shares. The computer then executes this order automatically, instantly, without any hesitation or emotion. But when we add AI into the mix, it gets even more powerful. Instead of just following rigid rules, an AI can learn from historical data, adapt to new market conditions, and even find profitable patterns that are completely invisible to the human eye. It's not just about speed, it's about intelligence. To really grasp how this works, let's peek under the hood at the core architecture of an AI trading system. It's like a three-part machine. First, you have the data ingestion module. This part is a voracious information gatherer, constantly pulling in massive amounts of data. We're talking stock prices, news headlines, economic reports, social media sentiment, you name it. Second, there's the brain of the operation, the strategy and analysis engine. This is where the AI algorithms live. They sift through all that incoming data, looking for signals, correlations, and predictive patterns. It might use machine learning models like neural networks to forecast where a price is headed next. Finally, you have the execution module. Once the AI brain makes a decision, say buy, this module connects directly to the stock exchange and places the order in a fraction of a second. Data in, analysis, action out. It's a seamless, high-speed process. Now for the really fascinating part. How does an AI identify patterns that humans miss? Our brains are amazing, but we're limited. We can only track a handful of variables at once, and we're prone to emotional biases like fear and greed. An AI has none of these limitations. It can analyze thousands of data points across hundreds of different assets simultaneously, 24/7. It might discover a subtle correlation between the price of oil, the weather in Brazil, and the stock price of a specific tech company, a connection no human analyst would ever think to look for. It can detect micro-patterns that last for only milliseconds or long-term trends that unfold over years, all with the same unbiased, data-driven approach. It's not magic. It's just a level of computational power and pattern recognition that is fundamentally beyond human capability. You've probably heard the term high-frequency trading, or HFT. It's important to know how that differs from the kind of AI trading a retail investor might use. HFT is a specialized, institutional game. These firms spend billions on getting a microsecond advantage, placing their servers right next to the exchange's servers, using custom hardware, and executing millions of trades per day to skim tiny profits. For them, speed is everything. For a retail AI trader, the focus is different. It's less about being the absolute fastest and more about using AI for smarter decision-making. We're talking about using AI to develop better strategies, manage risk more effectively, and automate our trading so we're not glued to the screen all day. So, HFT is a cheetah built for pure speed. Retail AI is more like a wise owl, using intelligence and patience to find better opportunities. Okay, so how could you theoretically build a personal AI trading workflow? Let's imagine the steps. First, you'd start with strategy development. This is the human part. You decide what you want to achieve. Are you a swing trader? A long-term investor? You define your goals and risk tolerance. Next, you choose a platform or programming language. There are now user-friendly platforms that allow you to build trading bots with minimal coding, or you could use languages like Python with specialized libraries if you have the technical skills. Then comes the crucial step, backtesting. You would test your AI strategy on historical data to see how it would have performed in the past. This helps you iron out the kinks without risking real money. Once you're confident, you might start with paper trading, using virtual money in the live market. Only after all these steps, and with a very small amount of capital you're willing to lose, would you consider deploying it live. It's a process of careful design, rigorous testing, and gradual implementation. One of the biggest, yet least discussed, benefits of automation is the psychological advantage. Let's be honest, trading is an emotional roller coaster. We've all felt that panic when a position goes against us and been tempted to sell at the worst possible time. Or the greed that makes us hold on to a winner for too long, only to watch it crash. An AI trading system removes that emotional baggage. It executes the plan, period. It doesn't get scared. It doesn't get greedy. It doesn't get bored or tired. By delegating the execution to a machine, you free yourself from the stress of making split-second decisions under pressure. This allows you to focus on the bigger picture, refining your strategy and managing your overall portfolio, which is where the real skill lies. It helps you become the manager of a system, not a gambler clicking buttons. Of course, it's not all sunshine and rainbows. There are serious risks that no one likes to talk about. First is the risk of overfitting. This is when you build an AI that performs brilliantly on past data, but fails spectacularly in the live market because it essentially just memorized the past instead of learning general principles. Another huge risk is the black box problem. Some complex AI models are so intricate that even their creators don't fully understand why they make certain decisions. If it starts losing money, it can be nearly impossible to debug. Then there are technical risks. A bug in your code, an internet outage, or an API change from your broker can all lead to catastrophic losses in seconds. AI is a powerful tool, but like any tool, if misused or not properly maintained, it can be incredibly dangerous. Never, ever invest more than you are prepared to lose. So, where is this all headed? The future of AI in finance is both exciting and a little daunting. We're moving towards a world of hyper-personalized finance, where AI assistants might manage our entire financial lives, from investing to budgeting to retirement planning, all tailored to our individual goals and risk profiles. For traders, the line between human and machine will continue to blur. Success will depend not on fighting the machines, but on learning how to work with them, using AI as a powerful co-pilot to enhance our own intelligence. The skills of the future will be about asking the right questions, designing robust systems, and understanding the strengths and weaknesses of our AI counterparts. The financial landscape is being rewritten by algorithms, and understanding this shift is the first step to navigating the future of money. Thank you so much for joining me on this deep dive into AI and trading. I hope this gave you a clear and balanced view of this incredible technology. If you found this video helpful, please hit that like button and consider subscribing for more content on the future of finance and technology. Let me know your thoughts in the comments below. See you in the next one.